Good morning. What is going on, everybody? This is the Crypto Key YouTube channel, and today we're going to be covering Altered Protocol. This is a interesting project that is based on the Terra ecosystem, and I'm going to be covering more of these projects as we are closing in on Col 5 releasing, in which a lot of projects are going to be coming out. We've got roughly 4 to 5 days, maybe a little bit less, probably, it depends if there's any delays. And to get into this, you can find Altered Protocol on Twitter at altered_alti. I think that's how it's pronounced, alti, I'm not sure. And then alteredprotocol.com is their website. Disclaimer, as always, guys, this is not financial advice. This is for education purposes only, and there's always a risk to lose all of your money invested, so please do your own research. So you might ask, what is Altered Protocol? Well, for starters, and I guess the most simplistic way to put it, it's a elastic token. It's a synthetic commodity money. It's essentially another ample, really is the closest way to put it. It operates in a similar fashion as Ample or Ampleforth, and pretty much your ownership is never diluted. So I'll cover this in a bit more detail, but that is the basics. Pretty much your supply of the token can contract or expand, or it can stay the same every 24 hours. And the big thing, what makes it special, is that it's non-dilutive and elastic, and it was made by the Terra team. So how does Altered work, you might ask? Well, Altered works in a somewhat basic fashion at its top level. It's a stablecoin that aims to maintain the price with the US dollar or within 5% of the US dollar, so within 5% of a dollar, i.e. 95 cents to $1.05, at least currently. It can go through different stages, 3 different states: expansion, contraction, and equilibrium. Expansion occurs when the price is greater than $1, and what expansion will do is pretty much expand the existing supply of tokens, and how that will affect you is because it's non-dilutive, your actual holdings of the token will increase with that expansion. Contraction occurs when the price is less than $1, and it does the opposite of expansion. So let's say there's 1 million tokens and it contracts to 900,000. Well, now your percentage of tokens is going to go down. So let's say you're holding 1% of the supply at 1 million tokens. Well, at 900,000 tokens, you're still going to hold that same percentage of supply, but now you are holding less tokens, as the price in theory will be going up. And equilibrium is pretty much, it stays the same when the price is within about $1. They also have a damping. Now this is a method that they have implemented to prevent the overcorrection of price. Pretty much the protocol will expand or contract with a smoothing target. At public sale, it will be 30 days, but will eventually auto adjust to about a 10 days time for this smoothing target. Use cases. Well, what are we looking at here? The near term it can be used to diversify your portfolio. In the medium term, it can be used as a reserve collateral, which would be neat and interesting as it does rebase and is not really pegged to $1. It simply tries to stay at $1. And the long-term use case is to be an alternate to central bank money. Now these next two things are more related to the token itself. The public sale info was there's about 50 million alti or alt tokens on sale through TerraSwap, and they're at a starting price of 0.00002. I mean, if you bought it and it's currently at 18 cents, you are up a absolute massive amount, which it's ridiculous. Now lastly, on at least this part, is the token distribution. 25% of the tokens are for the team, 20% to the treasury, 5% to LOTA or LOTA holders, and 50% to the public sale. Now, the next thing we're going to cover is I'm just going to briefly show you the website, as I have already popped it up on the screen, but I'm going to kind of walk you through the basics. So here we are looking at their main page here. This is the app itself at app.alteredprotocol.com. You can see they've got a swapping section where you can swap your UST for alt. I still don't know the proper way to pronounce that, as I could theoretically see both. And then you can see the target is currently 1 UST, and the price is sitting at 0.186. So it is way under the 0.95. So this is going to continue to change the supply, as we covered previously. Is going to continue trying to dry up the supply by reducing it to get it to this target of 1 UST. The current market cap is 2.6 million UST, a total supply of 14.4 million alti, and then you can see their price alteration, which you can tell, hey, it's 57% done, and in 10 hours this alteration will occur. The next prediction is it wants to be at 20 cents with a total supply of 13.2 million. So you can see it's reducing it by 1.1 million alti tokens. And then you've got your LP staking, which you can get 198% APY. And then you can see pretty much, about 1/14 of the total supply at the moment is staked with the UST and alti tokens. And you can see here, stake your LP to share 410 LOTA LOTA rewards and 150,000 LOTA per year rewards. So that might not be a bad idea if you want to earn the LOTA token. And so with that being said, this is Altered Protocol. Please let me know your thoughts down below. Do you think this is interesting, or do you think it's going to kind of go under the radar, like I would say Ample has done for the most part? It has picked up here and there, but it has not reached the same adoption as other tokens. So let me know down below, and I'll catch you guys later.